All right, more news in, and this morning a big announcement was made which has obviously brought in some more relief for the middle class. The RBI's Monetary Policy Committee has cut the repo rate by 25 basis points. This comes after the income tax relief of 12 lakh announced in the budget on the 1st of February. The announcement marks the first rate cut since May 2020 and comes under the leadership of newly appointed RBI Governor Sanjay Malhotra. This decision means home loan interest rates will come down, bringing relief to home buyers. With this latest cut, home loan EMIs are expected to decrease, making property purchases even more affordable. Lower home loan interest rates will provide much-needed relief to home buyers, making property purchases more affordable by reducing EMIs. This move is expected to drive demand for housing, boosting market activity and encouraging more people to invest in real estate. The RBI estimated GDP growth in the first fiscal year at about 6.7% and projected inflation at 4.2% for next financial year. The opposition, meanwhile, has hit out at the government, saying it was directionless and that real issues were not addressed.
The MPC unanimously decided to reduce the policy rate by 25 basis points from 6.5% to 6.25%. Consequently, the standing deposit facility, SDF, the SDF rate shall be at 6.0%, and the marginal standing facility rate, also called the MCF rate, and the bank rate shall be 6.5%. The MPC also decided unanimously again to continue with the neutral stance. The RBI has estimated that real GDP growth for the next year to be at about 6.7%, with Q1 at 6.7%, Q2 at 7%, Q3 at 6.5%, and Q4 too at 6.5%. The risks are evenly balanced. Coming now to inflation, headline inflation after moving above the upper tolerance band in October has since registered a sequential moderation in November and December, standing at 5.2% now. Going ahead, food inflation pressures, absent any supply side shocks, should see a significant softening due to good Kharif production, winter easing as we witness every year in the vegetable prices, and a favorable Rabi crop prospect. The MPC noted that inflation has declined, supported by favorable outlook on food and continuing transmission of past monetary policy action. It is expected to further moderate in 2025-26, gradually aligning with the target. The MPC also noted that though growth is expected to recover from the low of Q2 of 2024-25 this year, it is much below that of last year. Last year, you are all aware, it was 8.2%.